Alright traders, I am back again with another video, and I'm making this video especially for one of my YouTube followers, one of the people that really support me really strongly, and I appreciate this person. It's Mass Effect, known on YouTube as X777, so yes sir, I do appreciate you, and I'm sorry that I'm late getting to your video. Been running through some issues, trying to get myself straight, but I'm ready to go and I'm ready to roll. So I'm a little sorry that I'm late for you, but this will help you in the future. So look at some of the things that we talk about in this video to help you in the future. But I did realize that as you sent me your email and you discussed this trade that you got into, so you got into the trade right here. I had an issue with your entry also. Okay, so we're going to talk about your entry and we'll talk about your exit, which you asked me to talk about. So we'll do that. So the first thing was, let's go back, let's replay where you were and where you were so we could talk about that. So this is where you were looking at getting into the trade. You had a Keatington bounce right here. So the only thing that I have an issue with is basically we want to make sure we bounce here. All right, because you may not bounce at this level. You may just break through, like supposedly we were looking for a bounce right here, right? The market just dropped right through. If you put an entry at that level and the market keeps going, it's no longer a bounce. You just lose a trade. So you don't want to take that trade at the level just because it's at the level. What you want to do is see that price action entry to get into the trade. Now sometimes it's going to take you off of the level a little bit, but that's the risk. That's the risk you're going to take, because you want to be able to get higher probability trades set up and not just really like, because see, you're entering a market short. I mean, you're entering a market long, right? Because you're trading a bounce to the upside while the bears are in control. You don't want to be doing that. You want to make sure that the bulls are in control of this market or have started to come into this market before you get into the market. So you want to be going in with the masses. Now this trade is moving to the upside, so we look for the bounce here because this is a correction. So what you're going to look for is this. You got to bounce here quite possibly. So when the market comes to your level, what I like to do is go to the 4-hour time frame. Now I hope I don't lose this, my spot right here, right? I think that's still the same spot, right? Let's make sure. So I'm going to put a line here because this is where it is. So we were right there, and that's when we hit the level. Let's also do this so we could see the level. Make sure we see the level. This is the level. I want to see it on the lower time frame. So that's the intersection right there. We hit the street right there running. And then this is where, all right, so this is what that daily candle, this is where we hit. All right, so this is where we hit the level on the 4-hour time frame. So once that market hits the level on your daily, go straight to your 4-hour so you could get a better entry. Now see, I stay with the daily a lot of times. I don't usually switch over, but if you go to your 4-hour, it'll help you get a clean entry, a better, closer entry. So what you want to watch is this. So let's see if we can move forward one time. Okay, and then we move again. What you have is a rejection here at the cloud. Now if you keep Ichimoku on your chart, you're going to be looking like, oh wow, this is bearish, I'm supposed to be in a short trade. But guys, when you go to the day, when you're on the daily time frame, you're getting your bias. Okay, now this candle moved to the upside. I'm gonna have to get rid of that. But your bias, you're saying I'm gonna go long at this level. If you're gonna go long at this level, you don't change your bias because you change your time frame. So all you're gonna do is this. Let's go back again. So what I'm gonna do is take Ichimoku off the chart so you don't get confused. Let's hide it. Then let's go to the 4-hour time frame, because now we're going to just look for our entry. We're in our zone. We're on our support level. Now we want to see the bulls come into the market. We have a rejection candle right here. We could put our entry one couple pips above this level, so we would put an entry here, right? And then we would put a stop loss a little lower than the level. And I like to be lower than the lowest lows right here. Then that's included. So the market likes to come close to get you sometime. So what I'm going to watch is when I get triggered, and I'm triggered into this trade. Now if I didn't get into the trade at this level, even though I'm on the 4-hour, even though you have 2 candles in between, this is still going to be considered a morning star. So you could put your entry here. All right, so now you still got a good entry, and you're not gambling saying that it's gonna bounce here and I'm going to take the trade at this level. Instead, what you're doing now is saying you're seeing the bounce and then you're entering the trade. Okay, that's what you want to be doing. So I want to get to talking about your exits also, what you wanted to know about. But let's go to the daily now and see what that looks like, where our entry would be. So if you look at that, all right, and let's put Ichimoku back on the chart. All right, put Ichimoku back. And then now when you look at that, your entry is right here, as opposed to staying on the daily where your entry would be right here now, because you got, so with this two candles together, right, you're going to have a Pearson pattern because you close higher than the middle. Pearson pattern is an entry, is a signal to get into the market also, because what it's going to be, it's going to signify a possible change of direction. So that's a Pearson pattern that closes higher, a Pearson pattern that closes higher than the midpoint of the previous candle, bearish candle. All right, so that would be your entry on the daily, and then I showed you your entry on the 4 hour. So those are the ways you would get into the market. Now, getting out of the market, right? That's your issue, right? Let me show you a couple things here. Let's cover this a little bit. I don't want to be too long for you. Just want to make sure I get this to you. There's a couple things I do. So the easiest and most simplest thing to do is look to your left, all right, to see where the next support and resistance levels are. So follow those levels and just mark them. And then those are the levels you're going to shoot for the market to get to. And then I also like, if you're not real good at finding support and resistance levels, look for levels where it's support on the top and resistance on the bottom. Like this would be a good level. And then also use your flat clouds. Mark those as levels. All right, because that's where the market's going to bounce off of also. So you want to use those levels. But then another thing that I do is the market moves in waves, and basically you get that 1, 2, 3 pattern, or else that AB equals CD pattern. So what I'll use is my trend-based fib extension tool. So look, this is going to be 1, 2, and I could teach you way more than this, 3. And now look, the 1-to-1 move. So if you enter the trade here, because you're going 1, 2, 3, this is your pullback move and your entry off of price action. Again, we will go to a 4 hour. Now you have to have a level that you're going to trade, but it would be a support and resistance level. So if we make this trade, right, where's our target if we get in down here? Well, we put our fib extension tool to find our target, which would be right here at that 1-to-1 ratio, 99292. The market moved right to that level, guys, right to it. You take your profit. Now also, when I see a little indecision candle like that, what I'll do, even if I don't have my level marked, I'll just put I'll bring my stop loss up to that level. Either the market's going to go higher or it's going to trigger me back down, and I would take my profit there. You can see. All right, so in your case now, where you had entered the market, we're going to look at how to mark that level. All right, so I'm using the fib extension tool. I'm going to go 1, 2, 3, and we're shooting for 4. So what I'm going to mark is this low, 1, 2, 3, and we're shooting for 4, this target up here. Now I got a resistance level there, so what we want to do is try to shoot for that target. All right, so we're going to watch where your market goes. All right, and also you got to make sure you get past 2. I always tell people 2 is the fluctuation level in the market. All right, so when you go 1, 2, you want to make sure the market gets past that level. Now what I do here, I'm not getting a lot of profit by taking my stop loss here, and sometime you're going to make that profit, sometime you're not. And then just see what the market's doing here. All right, so you're right at your resistance level here. Now you probably wouldn't have lasted through this here, most definitely. You definitely probably would have, because you came back down to probably almost where you got into the trade right here. All right, so you probably would have gotten out up here, I tell you, through your 2 level. But if you're able to get through this level and the market doesn't spike you like that, continue to see if you could get to that 1-to-1 ratio level. Now you're hit with that resistance, and I definitely would get out the trade there. All right, because now I've got a bearish engulfing on resistance, and then the market probably drops down to the downside, and we could see the market now bounce off Kijinsen again. We would look for our bounce again and then see if we could get that trade. We will go to the 4 hour time frame. So let me go. Let's take this off. Let's now go to the 4 hour time frame. Actually, let's go back to the daily. Let's put our level here, what we're looking at. Now you also know you got a flat cloud here. That's going to be a level you're going to look to bounce off of also. So you're bouncing off the Kijinsen. You got some confluence with the flat cloud. You go 4 hour. You got a hangman here. I mean, sorry, not a hangman. You got an inverted hammer. And then entry above that inverted hammer. And then you could see the trade took off pretty good for you. So that was the 4 hour entry, and now you are where you are. Now the inverted hammer entry was here. All right. And then also there's other ways to trade this. Now when I look at this, if I'm on the 4 hour, daily, or whatever, any time frame, what I look at is box that market in, because that market, if it's boxed in, it's trading inside of one candle body. Eventually it's got to come out of there. So I'm going to trade the break of those levels. All right. And then if it ranges in there too much, I go to a lower time frame and trade these upper and lower levels. But hopefully this helps you. Hopefully it helps you out a little bit. I'll be trying to explain more to you as I do the Ichimoku sessions. I'm gonna put these videos on, start making some Ichimoku videos for you guys, and talk about the basic Ichimoku concepts and trade setups. And hopefully that'll help you out with some of these. Now, the Kijinsen bounce trades and Tenkan bounce trades, pretty much those weren't taught basically in Ichimoku. Those were trades that I looked at and started to trade myself because the market sees these as support and resistance levels. All right. So Ichimoku signals are really TK crossovers, Kumo breakouts, cloud support and resistance levels. Now you do look at Tenkan and Kijinsen because they are support and resistance levels. So therefore I look for bounces on those levels. But again, hopefully this helps you out, and I'm coming back with some more stuff for you. So until next time, have a great one. Thanks for being a member. And thanks for being a follower. So, all right. Appreciate you. God bless. So long.